At any given time, the market can turn to bearish or bullish because stocks only move one of three ways: up, down, or sideways. 71% of the time, the market moves in an uptrend. But what happens when the market turns into a downtrend and the sentiment becomes bearish? This can be scary for a lot of new investors when they see their account balance going down. So I'm going to break down some companies that have fallen really big in the past couple of days, why they fell, and how I handle them if I'm in that stock. First off, what happened to Zillow? So some of you guys may know this is one of my biggest trading positions for the past few months. At one point, I had over $20,000 in the stock, and this was because of my conviction. I use this company every single day to look for houses, and with the extremely hot housing market and their current business model, I was extremely bullish on this company going forward. They were set to pretty much take over the real estate market. So what exactly happened? On Tuesday, some negative news came out. It pretty much completely changes their company outlook. Their business model is way different now because they're not going to be flipping homes anymore. And this is a major source of income. This was why the Zillow price went so high back in January to $200, because they're projected, with the increasing real estate market as well, that they're going to be making billions of dollars on these house flipping deals. So now they're going to be selling over 7,000 homes for loss, and also they're going to be cutting over 25% of its workforce. So they're downsizing this company. They got a lot of financial problems right now, and this is going to cause a lot of investors to just completely get out. These are not problems that are going to go away in the next year or so. These are problems that, it could take 5-10 years for a company to come back from this, or maybe even put the company out. This could just be the start of a complete downward spiral into bankruptcy. And while it doesn't happen too often, this stuff can happen. If you're in a stock, the business can completely blow up. This is a risk that you have to take. It doesn't happen very often, and there is no reason for anybody to know or to believe that this was going to happen to Zillow and their business model. Just remember that that's something to be aware of. Now, with me in this stock, let's go over to the chart here. You can see that it was pretty much in a downward trend for a couple months, but what I do is I buy stocks after they go down and start to move sideways, and I try to get in before the trend goes up higher so I can make the most money. So obviously I was wrong, but you know what? Warren Buffett's wrong too. Stock investors aren't perfect, and you know what? If you want to be a football player, you gotta be okay with getting hit. So just don't change anything if it doesn't work. This is not a common occurrence. Stay convicted in your trading system, believe in it, and you're going to make money. So the very first red flag that came up to me with Zillow was right here where I'm pointing this arrow at. So this was Tuesday, just a little bit before the news broke. This is extremely bearish for me. When it breaks down below that 20-day moving average, it's the start of a new downtrend, and it could be the first day of a sell-off. So at this point, the stock's going down. It's not going to start going up until the moving averages come back together and price actually starts moving in an uptrend. Now, aside from the news, what made the stock completely gross was when it broke the support line right here. Once this line was broken, all bets are off. This thing can go way lower than you ever imagined. So this is a good time. If it breaks that support line, you could put a stop loss there. So if it breaks that, it automatically get you out. Don't buy Zillow right now. Just because I know I say you want to buy companies after they fall, so you're getting a good deal on them. Do not buy this company right now. It could go a lot lower. Be patient. Know what you're buying. So I'm not saying that the company is never going to come back. Maybe I'll end up buying it in a few years, but right now they got a lot of problems to work for, and I don't think it's worth the risk, and I don't think it's worth the capital allocation that you'll have to sacrifice in order to still stay in the stock. So with me in this stock, I did lose money on it. I didn't lose nearly as much as I could have, though. So what I did is, once it broke down below that 20-day moving average, I bought puts. I bought puts for $85 because I was expecting it to go down to that support line, and it did. And it kept going the next day. So that next day, as soon as it broke that support line, right at open, I sold all my shares. And I only took about a $3,000 loss on it. But $2,000 of those $3,000 were unrealized gains. So technically, I only lost about $1,000 of my own money. It could have been a lot worse. Puts, buying options, risk management, that's for a new video. But All I can say here is that if I was to do nothing, if I didn't look at it, I just bought it and didn't look at it, and I just went on about my day like somebody that's lazy and doesn't know a lot about the market, I could have lost like $10,000 easily in this trade, probably more. So just me caring about it, looking at it every day, and knowing kind of how to manage my risk, I gave myself the upside of making over $20,000, but I only took the downside hit of $1,000. So we'll go over a few more companies. The next one I want to go over is Roku. So this one didn't have near as a bad downtrend as Zillow did, but it is now in a downtrend, and it did gap down about 8% today. So we're sitting at about $280, $290. And here's something really important I want to show you guys. Since it's still in a downtrend, I want to show you the support level right here. So it stopped back there in May, and now it's stopping here in November. If it breaks this support line, there's one more below it. But if it breaks that one, again, all bets are off. So that is a good point to put a stop loss. I did buy 2 puts today on Roku, so we'll see what happens. I do actually believe in Roku a lot more than Zillow. Their business model hasn't completely collapsed like Zillow, so I do believe in this company a little bit more short, medium to long term. And if we get back in that consolidation point, and if we hold the support line, it's extremely bullish, and I will continue to add here because historically Roku has traded higher. Another company that got hit really hard is Penn. It had about a 25% hit today. That is an extreme downtrend. People will tell you, "Oh, buy the dip, buy the dip. You want to get a good price." Don't do that. You want to buy the dip after it stopped dipping, right? So don't catch a falling knife. If it's falling, you don't want to get in on the downtrend. You want to get in right before it turns into an uptrend, so you make the most money. Like, that's the point here, right? We are here investing in the stock market to make money, right? So don't buy something just because it fell. That's an instinct of a lot of new investors. And when I first started, I've fallen into that too. It falls crap ton, and you're like, wow, this is such a good deal. Like, I'm going to be courageous and step in and make the most money because I'm buying a lower price than everybody else. Yet it could still fall another 10, 20, 30%. Like, these things take time. And you can see that it broke the support line here. And if you guys don't understand support and resistance, I'll make a video. But you can also ask me, like, oh, where's the support line on this? And I'll show you, and maybe that'll help you see it on that chart. Another one that got smashed the other day is Chegg. Like, people will ask me, like, oh, why don't we buy the dip here? Like I said, it could keep falling. Even Chegg, you can see it moving sideways for 2 or 3 days. When there's that much damage on a stock, when it goes down that much, you want to give it a little bit more time. So go online, read about the company. Why did they fall? What happened? Do I still believe in the business model? And then you can add these to your list if you still believe in them and get a good price. And if you believe that these stocks will trade higher and trade where they were before they fell, then you're going to be getting a great deal as long as you have the courage to hold on to them and you believe in your convictions of what you read. And then one last thing I want to leave you guys off with before I let you go. When stocks fall, you want to look at the sector that they're in. So if you have Chevron tanking, but you have also Exxon tanking, that is a sector problem. If an entire sector is going down, you don't need to freak out and panic sell. You can just hold your shares and then just buy more when they fall. There's no real reason for a company to fall if an entire sector is going down. You know what I mean? So, like, if an entire sector falls, that's just the way that the market's drifting. It doesn't mean you have to get out. It doesn't mean that there's anything wrong with the company you're in. That's just how it is. So with Zillow, that company is going down, but you look at its competitor in Open, and that stock's at an all-time high. You look at Blackstone, it's at an all-time high. So when you have one sector completely split like that, you don't want to be in the ones that are going down because there's going to be an extreme pressure to the downside. So I hope that made sense. If it didn't, I'll clear it up. But thank you guys for watching.